Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. So I got an interesting article here. It comes out from Bloomberg. It's titled Bostic sees Fed pausing after just one rate cut in third quarter. So, we heard from the Fed that they're looking to cut rates 3 times this year. And we've always seen the Fed often change their opinions, often change their views. And you can't really trust the Fed too much because, as we've seen, right, in history, they've always been wrong. The Fed's always been wrong. That's the thing, right? The Fed's always been wrong. And we've seen that also during COVID, right, in 2021, where Fed kept saying that inflation is transitory and then eventually admitted that they were wrong in December 2021. And we also seen that the Fed was talking about rates higher for longer. They hiked rates aggressive 2022. They were, keeping the tightening in 2023 as well. And they were pushing out the narrative that they're not cutting anytime soon. And then in December, early December, they were saying that they're not cutting rates anytime soon. And then literally 14, 15 days later, they completely flipped and said, yeah, we're going to cut rates 3 times next year in 2024. Right. So you can see how they flip flop a lot. Right. And right now they're data dependent. The markets were pricing in some sort of rate cuts in March. It didn't happen. You're hearing now markets basically price in rate cuts of June, July because the Fed did a good job really pushing out the rate cuts expectation coming anytime soon. And 3 cuts are currently penciled in. We do have a March meeting coming up. So it's gonna be interesting to see if anything changes then. We have also Jerome Powell coming out who's speaking Wednesday, Thursday, testifying in front of Congress. We're going to hear what Powell has to say. Does he change his opinions on monetary policy and rate cuts? But what's very interesting is before Powell comes out and before the meeting, we have Bostic saying that he sees one rate cut and then pausing after that. So does that mean that 3 rate cuts are no more the theme? I'm not sure. And Bostic is also worried that the rate cut might unleash this pent up exuberance, which might cause inflation to tick up and make it harder for them to reach the 2% target. So let's get into this article. I'll read it a little bit here. You can follow along and then I'll give you my explanation. But it says here the Fed of Atlanta uh, pre- Atlanta President Raphael Bostic said he expects the Fed's first interest rate cut, which he has penciled in for the third quarter, will be followed by a pause the following meeting to assess how the policy shift is affecting the economy. Bostic is separate commentary published in a separate commentary published on Atlanta Fed website Monday, said he's worried that businesses have too much exuberance and could unleash a burst of new demand after a rate cut that adds to price pressures. That could be another reason not to cut rates at a rushed pace, he told reporters in press briefing. And I mentioned this many times in my previous videos. They're not going to cut rates right away. They're going to do it slowly, cut rates very slowly, incrementally, pause, cut rates, pause, assess the data, the situation, the job market, the economy, inflation. Because, like I started in this video, they were wrong in the beginning about inflation. They said it was a transitory. They don't want to be wrong again. It would really look bad and it would hurt their credibility. So they don't want to rush to cut rates because if they rush to cut rates and nothing is going wrong in the economy, they will really see levels of crazy pent up exuberance, pent up demand, pent up FOMO, you name it. Probably even worse than the COVID time, right? So they're Bostic's very cautious there, and it says he wants to assess the situation. So does that mean again going back cutting rates and then assessing? And does that mean you'll skip one of the rate cuts that were supposedly supposed to come? Right? We don't know. That's what it's sounding like, but we'll have to see. He then goes on to say, I would probably not anticipate they would be back to back cuts, pushing back on the idea of no back to back cuts. Again, they don't want to rush the cuts, they want to be slow at it. Given the uncertainty, I think there is some appeal to acting and then seeing how participants in the markets, businesses, leaders, and families respond to that. Bostic comments came in advance of Fed Chair Jerome Powell monetary policy testimony, which he is speaking Wednesday and Thursday. And the chair is expected to repeat the policy committee's message that there's no rush to cut interest rates. Now, they left rates unchanged in January. They pushed the idea of any rate cuts in March. And now investors are seeing that central bank will begin easing in June, according to the futures market. And we have also one update coming up in March 19th, 20th on a meeting. And we're going to hear from the Fed also on what's their plans for rate cuts there. Now, pent-up exuberance. Bostic also said he wants to keep reducing the size of the Fed's balance sheet at the current pace for some time rather than moving quickly to taper the reductions. In terms of QT, I'm hopeful that we can continue the pace that we are at for as long as possible. And as we get further from the most acute moments of that emergency, I think it's appropriate for us to return to more normal posture. So basically, keep the tightening going, keep the QT going, keep higher for longer, right? Now, he also mentions businesses revving up spending and investment could boost inflationary pressures, and that could happen at the first hint of an interest rate cut, Bostic warned. This threat is of what I'll call pent up exuberance is an upside risk that I think bears scrutiny in the coming months. As my staff and I talked about business decisions makers in recent weeks, the theme we've heard rings expectant optimism. Now, here's the thing, right? Businesses revving up spending and investment could boost inflationary pressures. That could happen at the first hint of an interest rate cut. How many of you out there have seen this FOMO already start? Right? You might have heard it in the real estate industry. You might hear realtors out there talk about again, oh, as soon as the rate cut comes in, you're going to see everyone lining up to buy a home. As soon as the rate cuts happen, you want to get in. So instead of waiting for the rate cuts, because rate cuts are coming, why don't you buy now? Again, creating that FOMO, that pent up exuberance, pent up demand, pent up FOMO. Because hey, the economy's fine, the job market's fine, and inflation is going lower and lower. We've surpassed the idea of any recession. This is a soft landing. All is well. Time to buy massively with massive leverage. That's what the thinking that the realtors have, and maybe many others. If you look at also the stock market making all-time highs, you see Bitcoin, crypto markets also approaching all-time highs. And probably by the time this video is out, Bitcoin's probably already hit all-time highs. And gold doing well, right? So a lot of these asset prices are doing well. And now you have the idea of a rate cut. That's going to get people thinking, oh, wait, hold on. Stock market's at all-time highs. Bitcoin's at all-time highs. Gold is going up. I missed out on all of this. I thought a recession was coming. All right, let's go buy that real estate. and everyone rushes to the gate. The sheeps rush to the gate, all rushing to the gate to get slaughtered, right? So you get that pent up exuberance. Now, when you get that pent up exuberance, what do you think the central bank's going to do? Start cutting rates like a mad person? Oh, we should cut rates all of a sudden now because look, everyone's buying and things are well now. So let's fall into that trap. No, Bostic just said he expects some exuberance. Businesses are going to think, okay, things are probably going to get better. Individuals going to think it's going to get better. They're going to maybe spend more. Maybe. Bostic can be wrong too. But it's going to create that FOMO, that little splurge of hike, which might cause that inflation level to hike, which will cause them to maybe pause and hold and not cut that fast. And let's not forget also that trillions of dollars in commercial real estate's coming due by the end of 2025. So this works, if you look at history, if you just simply study history, it mimics the past, previous recessions. You got the rate hikes, then you get a very long pause, which we're experiencing. Then you get the rate cut. And it's not an aggressive rate cut, they're slow rate cuts, followed by then the economy deteriorating, getting really bad, something blowing up, and only then, the back to back rate cuts. Well, Daniel, can you be wrong? Sure, I can be wrong, right? There can be a possibility of the soft landing, but when you look at history, when you put it all together, the chances of a soft landing, according to history, has a very low odds. The higher odds is more of the hard landing. So especially if the pent-up exuberance comes in, why would they cut aggressively? And even if they do cut, they do 3 rate cuts, they do 4 rate cuts, they do 100 basis points of rate cuts. That still leaves the interest rates plus 4%. That's not helping anyone still, especially for a lot of people who needs to come and refinance their mortgage and the commercial real estate and so on. It still doesn't stop from the businesses laying off workers, doesn't stop from people losing their jobs, doesn't stop from people not making those payments, which then trickles into the businesses and the spending and the economy, and then something toppling over, right? So again, the pent-up FOMO, the pent-up demand. You could expect, the markets to continue like this, FOMOing, crypto to rally, stocks to rally, maybe S&P 500 hits 6,000, right? And then we get into next year, and as we approach closer to the end of next year, everyone chases the top, buys the top, and then the sheeps come in buying the top, and then they get slaughtered, right? So it's very typical. It's very, you see this in history over and over again. And, you've got Fed members coming now giving you clear signs, right? It's not me. It's the Fed telling you that we don't want to jump the gun because we did that previously and it didn't look good. So, in other words, to me, it tells me they want to break something to bring inflation down. Because again, when you look at history also, when they do break something, inflation does crashes. It does come down, especially if something breaks. So anyways, I'm just a guy behind a screen giving my own 2 cents, breaking down the what Fed members are saying. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye-bye.